Everyone, I'm Roger Herring and I am the Investor's Accountant. Welcome to my office in another edition of Ask Roger. You know, I was talking to my marketing team and they told me that one of our most watched videos over the past 30 days was actually something I did back before COVID, and it was on OwnerFi. So the question that I was asked is, for tax purposes, what is the most powerful version of an owner finance for selling a property? Well, you know, owner financing is a really powerful tool in the REI's toolbox. And there's two ways you can use it. You can use it to buy and you can use it to sell. Now, we love creative deals and acquiring property on OwnerFi, whether it's subject to or whatever. But the real value comes when we sell with OwnerFi. So let's just talk about it. There are different types of owner financing, as you already know. There's a wrap, there's an agreement for deed, there's a land contract. These are all owner finance, and the IRS all considers them a sale. Yes, I know the land contract says they don't own the land until they make the final payment. Guess what? The IRS doesn't see it that way. The IRS treats it as a sale. So no, it can't stay on your rental property schedule. It is considered a sale. All right? Now, there's several things you need to consider here. Okay? The different types of OwnerFi. First, make sure that they're legal in the state where you're working. Not all states are created equal. Yeah. So in some states, it's okay to do a wrap, but a land contract or agreement for deed is not legal. Make sure you get it right, okay? Now, make sure you qualify to use the installment sale treatment. Well, what do you mean, Roger? I can OwnerFi anything. Yeah, you're right. You can owner finance anything that you want. You can buy a house and you can immediately turn around and flip it using owner financing. What you can't do, though, is do that and use the installment sale treatment for tax purposes. In fact, I read a great article. It was called "A Great Way to Destroy Your Real Estate Business." And it was all about people that are flipping using owner financing. You see, a flip doesn't qualify. In order to do an installment sale, it must be a capital asset. That means you have to have held it for a 1-year holding period, and it needs to be something that you put a tenant in. Okay, you can't buy it with the intent to flip it, never put anybody in it, you held it for a year, oh, now I can owner finance. Sorry guys, it doesn't work like that. Okay, but I'm going to teach you a good method to make sure you can always use the installment sale treatment. All right. So the question becomes, is it inventory or an asset? When you're flipping property, it's inventory. When you hold property for appreciation purpose, that makes it an asset. And that's what allows you to use the installment sale treatment that is going to allow you to spread the capital gain and the part of the depreciation recarry. The capital gain and what we call Section 1250 unrecaptured gain. That's the 27.5-year depreciation. That's spread over the life of the contract. But if you've taken any accelerated depreciation on that property, it's recaptured in the year of the sale. Well, Roger, what happens if I do a flip and I decide to owner finance? I haven't collected all the money. The IRS doesn't care. If you flip using owner finance, you are required to report the entire amount of the income in the year of the sale, whether you've received it or not. And oh, by the way, guys, it's ordinary income. It's not capital gain most of the time. All right? Enough said about that. So, Roger, you just said that there's a way we can guarantee. Yeah, there is. It's called a lease option. I love lease options. Why do I love lease options? Because I get to use this as a 1-year test. I get to find out how these people are going to pay and how these people are going to treat my property. They're going to give me a down payment. We're going to call it a lease option payment. And you know what? I don't have to claim it right now. It's not taxable until it is either exercised or it is expired. And I'm going to give them 1 year. All right, during that 1 year time, they have to be on time with every payment. They have to keep my property looking immaculate. If they violate any provisions of the lease option agreement, I evict them. That's the way it works. Now, bad things happen to good people. Let's say that a year goes by and they've still got some problems and they're not quite ready to buy. If they've made every payment on time, and if they've kept the property up very well, you have the option of doing an extension on that contract. And that's going to extend the time that that original option fee has before it expires. So guess what? You still don't have to claim it. And the extension fee, that's an option fee too. You don't have to claim it either. Now, let me tell you another little trick with Owner 5. We Americans, unfortunately, as a nation, we have become dumb. All we care about is how much is my monthly payment? How much is the note? That's not a good thing, but for us as REIs, it allows us to be creative because we can establish how much monthly payment that they can make, and we have a target sales price. And now what we do is we drop the interest, we increase the principal, and we go forward. Why are we doing this? Because if we drop the interest, we have lower interest income every year because interest is ordinary income. Whereas we raise the price, that's principal, and guess what? That's capital gain. There's the difference. I love Owner 5. Absolutely awesome tool. Make sure it is legal, the method that you are using. I strongly recommend that you use the lease option method so you can see how these guys are going to pay. And hey, be creative on the back end in doing your deals. Hope you've enjoyed today. Until the next time, Roger out.